Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1563rd edition of Short-Term Trading Live with Oscar. Good evening, traders. An early video this evening because markets have changed. Before we get into what's in the video, please know that futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders. You must recognize that you can lose a lot of money in this game. Don't let anyone talk you into just trading futures. Know your risk. Come on down to livewithoscar.com where I can help show you how this game is supposed to be played. Traders, this video is coming to you on a Monday night for trading Tuesday. That would be January 10th, 2017. Right off the bat, OMNI has flipped to red OMNI in U.S. indices for trading on Tuesday. We were bullish for Monday. OMNI flipped to red OMNI for trading on Tuesday. Now, OMNI is a day trader. We are day traders by nature. Every day is a new adventure. If OMNI is green on Monday and red on Tuesday and green on Wednesday, so be it. If you loons are going to write to me that why am I red today if I was green yesterday, because that's the way day trading works. Let's move forward. So for trading on Tuesday, we have a complete flip turnaround in every indice has gone red OMNI except for NASDAQ. Everything else that I track, which would be Dow Jones Transportation, the industrials, I look at the DAX, I look at the Dow, of course, itself. I look at the emini S&P. I look at the NASDAQ. I look at the Russell. I look at other indices. Everything I looked at flipped except for the NASDAQ. So we have flipped for trading on Tuesday. Remember, every day is a new adventure. Bullish one day, bearish the next. Here's what's interesting. This is the Dow Jones Transportation Average, and it does seem to be leading the parade here. This and the Russell seems to have taken over and is starting to drag the other indices towards the downside, according to OMNI, as of the close on Monday afternoon. So here we are Monday night for trading Tuesday. It doesn't look like the trending has all that far to drop, right? If it dropped, I mean, it's a little significant, but you've got a meeting of the minds about to take place down here, which I'm assuming will be support for the tranny when it gets there, one day at a time. Bearish for trading starting out. Let's look at a couple of other charts, traders. Dow Jones Industrial Average, we have a red OMNI, and you've got this going on. Remember yesterday I showed you a beautiful little video, and I said, oh, look, we got out above the flag. Look how great it looks. Well, that was yesterday. OMNI flipped, and look where we are. We're back inside the flag. Forget about that breakout. And we're back in the flag, and it looks like we're probably going to rotate now down a little bit. Maybe it will, maybe it won't, but that's the OMNI signal, and we are back inside the flag. So overall, we're not bearish, but certainly for trading on Tuesday, we've got the red OMNI. So that's Dow Jones Trading and Industrial Average. I believe I may have a chart here on 12. Let's go look here. All right, so there's your E-mini S&P, same sort of action. You had a nice day out. All right, it looked great, but it turned around on Monday. Dumped right back in. Monday night for trading Tuesday, we're already down here. So we're inside the flag once again. Will it rotate? Is this just bull flag rotation? Well, what does that mean? Well, look at the way it rotates inside the flag from top to bottom. So maybe we're just going to rotate back down again, right? That could happen. This is January, and if it's going to come off and rotate to the bottom of a flag, after what I showed you in the last couple of videos, Jan would be a smart month to do it in. We shall see. So one day at a time, bearish your E-mini S&P, your tranny, your industrial average, and your Russell. Let's go take a look at a couple of other charts here. Interesting chart is this one. Gold, baby. It has been flagging bull signals. All day long it went bullish. Tonight it's bullish. It looks decent for now. It's inside of a nice channel, and it's starting to run up towards an average. Green OMNI in gold, unlike the E-mini S&P, which would be red. Green OMNI in gold for trading on Tuesday, 1/10/19. Now, what you have inside this channel in the gold is the possibility of a little baby bull flag building right here. Let's see if I can sort of maybe that's a little bull flag building, right? Give it another day or two. It's inside of a channel. Heading up, Omni's green, so we like the gold as well. And then there's one little bonus chart I wanted to throw at you, traders. Take a look at this one. This is an interesting chart. Let's see if we can find it for you. Yes, your 10-year notes weekly bar chart. This is not a daily now as the other charts were. This is a weekly. So each one of these green lines represents a week's worth of trading. Why I brought this to your attention, two quick things. One, it's been quite some time since you've had anything that looks like a bearish trend beginning in your 10-year notes. And these two lines right here, these two colors that are together, this goes all the way back. Now follow me with this. We broke this trend line, or these two trend lines right here. Big break of these two trend lines. You see them? Let's make this red because that's what it deserves to be. It broke the trend lines. So this box, nice and red here, we broke those two trend lines. Now the last time we broke them, you hovered around a few weeks and went back up. Last time you broke them, you hovered around a few weeks and went back up. Prior to that, you didn't break and you didn't break. Right? Held and went up. Held and went up. This time it hovered around for a while and it didn't hold. It dumped big time. Then it broke a secondary support line, this white one, which stretches from 2014 all the way till today. This white one right here. So from 2014 all the way till today, you broke that one and you broke that here. So this is probably a bear flag building. Now in a weekly, it takes forever for a bear flag to form, so you can't trade it, but it looks like a bear flag forming. Now, that was what I wanted to show you up front, and I'm going to take a little ride with you for a moment with this chart. See this trend line that I was saying that we broke right here, which is very significant because then we continued down, unlike what happened here and here and here and here. Well, let's follow this trend line back to where it started. This is 2017 top day. Let's go back to where these trend lines begin their lives. You know what date this is? This is 2007, traders. This is a 10-year trend line that has not really been pierced until the action recently. So bonds look like they want to rally a little bit, and I don't disagree. I think a little bit of rally is coming in bonds. But being that significant damage has been done, then it continued, then it broke this white trend line, and more significant damage has been done. I think in the end you will be selling the rallies on this weekly chart. If it rallies up, in the end I think we will be selling and expecting more. And then here's where it gets interesting, is the second thing. We broke the trend line back from 2007, I just showed you, and we have not been, yields have not been above 2.6%, or just about 2.4, 2.6, in your 10-year notes since 2014. This red line represents that. Since 2014, we have not pierced the 2.4, 2.6 yield on the 10-year notes. When bonds go down, when you see this thing go down, yields go up. This number goes up when these bonds go down. That's how it works. So this is about this area right here. Let's get a little bit smaller box here. This area right here is about 2.6%. We bounced off of it. Boom, bounced off of it. And rates lowered. And rates lowered. And rates lowered. And rates lowered. And here we are back down to 2.6, 2.4. Down there. Same spot as here. We're bouncing. That is what happened every time. If we bounce, let it bounce for a while. If it fails on that bounce and you fail at this white line, we could have some downward movement. We'll see. We'll take this one day at a time. I wanted to bring that to your attention as this is a much, much longer thought process behind this trade, and it takes much longer for a weekly chart to develop. But this is interesting, especially if you're out there looking for mortgages, locking in mortgages. If you're a mortgage broker, it looks like you could sit tight for a couple of days as the rate goes down a little and the bonds go up. But eventually, if we take out this 2.6 floor, rates will skyrocket as the bonds head lower. Traders, I'd love for you to join me in my free trading room at livewithoscar.com. Remember, no credit cards needed, no questions asked except for a username, chat name, email address. Come on in and join us. I'm in my live trading room all day at livewithoscar.com, day and night, by the way. And remember, this is a very emotional game, so I want you to keep those emotions out of trading. One of the best things I know you can do to keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll traders, I will see you all at livewithoscar.com.